Look, Australia's banking sector has come through this financial crisis better than almost any other country in the world. The banks are strong and stable. Why do you have a problem?
Well, they are strong and stable fundamentally because of a policy I implemented in 1990-91. This is what's called now the Four Pillars policy. That is, I wanted to see banks into separate and discrete units, operating effectively without the cross-contagion of becoming too big. There's a great debate in the world now about this question of too big to fail. If institution becomes too big, then the onus falls upon the taxpayer to maintain their solvency. Far better to have smaller, discrete units operating, and Australia adopted this policy 17 years ago.
Were you predicting the crisis at that point?
No, it's just that you just can't fall for the bankers' nonsense about we've got to get big to grow up. I mean, the fact is, if they become too big, they present a systemic risk. Now, so the good news is our banks did better because of the separation, but the less good news is that the cost of this crisis has been that they have swallowed up some of the second-tier banks, like, for instance, Westpac swallowed up St George, the Commonwealth Bank, Bank West, and this has reduced competition, particularly in the housing market. And we're going to see the effects of that in interest rates.
But what should the government have done?
Well, basically, probably supported Bank West. With St George, I would never have agreed as Treasurer to allow St George to go into Westpac, because you go from 6 banks or 7 banks to 4. And in the end, what they'll do is, working on the basis, never give the suckers an even break. They'll simply put the margins up. So we believe, I mean, it's good. Our 4 banks are well managed. They've had good managers. They're now into wealth management, which is a good thing. Well, that's what happens. You see, in a crisis, everyone runs for cover, but afterwards you get left with a system which is less competitive. And I think the government's now conscious of that, and that's good. And I think, therefore, the premium on competition will probably rise.
Now, New Zealand has just come out of a recession. Australia actually technically didn't even fall into one. So I guess that's is that due in large part to the good management of the Rudd government?
No, it's the flexibility of the economy. It's the good management of the Rudd government, yes, but it's also the flexibility of the economy. The exchange rate, the wages system, these changes which were put into place in the 1980s and 90s have fundamentally stood Australia in good stead. And the government responded quickly and effectively with the stimulus, and the Reserve Bank responded by dropping the level of interest rates, softening monetary policy quickly. That quick response by Australia meant that as we saw a fall in private demand, the public demand from the budget was there to take its place, and people's disposable income was increased as interest rates fell.
What about in Australia, though? Is the stimulus overdone here?
Oh, no. And the good thing is I think the government designed these as one-offs. They don't continue to be a cost to the budget. And as the stimulus comes back, I think there's going to be a reasonable, given the level of corporate profitability, etc., there's going to be a reasonable level of private investment and consumption. So in other words, we ought to be able to make a smooth transition from the stimulus back to the private economy. Much tougher for the Americans.